Yes, 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 I am. And thank you so very much. Thank you, Miss Edgecombe, for what you do. Thank you for your dedication. Ladies and gentlemen, I just want to give it back to her because if you've had the opportunity to be in her presence, if you've had the opportunity to hear her, you're definitely in for a treat. She is definitely an asset to the BYOB, to the BYOB family. Be your own bank. And this, I'm excited because this is Be Your Own Bank Day. You made a decision. You have honestly made a decision that you want to be your own bank. And that's what this is all about. That's what we are here for. We are here because you made that decision to be your own bank. So I'm excited. And you have to be excited about that. Now, what is the BYOB Cash Out? We heard her talk about it. Tonight is training. And I'm excited about where we're going tonight with tonight's training. I'm excited about where it's going to take your trading and where it's going to elevate you to. And I'm going to explain the cash out and I'm going to explain time frames and then I'm going to tell you because our personalities are different. We all are just different when it actually comes to trading. And so when we talk about being your own bank, we talk about you enrolling. We talk about you having the opportunity to enroll, you learn, and then you put yourself in a position of profit. And putting yourself in that profit is all based on your personality. It's all based on you maximizing the tools. It's all based on you maximizing what is out there. And the beautiful thing is that the cash out works on everything. The BYOB cash out allows you to cash out on everything, every time frame, every currency, whether it's foreign exchange, cryptocurrency, whether it's indices, the metals, indices meaning the Dow Jones, you know, but I do want to caution you. I want to make sure you're being an effective trader. And I want you to think about something. If you are new to trading, I can only make a recommendation. It's up to you to follow it. And I'm giving you this because of questions and comments and different things that I've received. So when you learn how to drive, when you learn how to drive, when you learn roads, you're going to learn how to drive in let's just say a Honda Accord. You know, when you want to think about a car. Or would you put your 14-year-old, would you put your teenager, would you put them in a sports car? Would you put them in a sports car with a top down? What would you put them in? And the reason I say that is because, yes, it's all a car. Yes, we're looking for movement. Yes, it all moves the same. But when you look at the fact that you want to trade indices or you want to trade cryptocurrency or you want to trade the metals or you want to trade different things, my question to you is, do you learn there? Do you start there? Do you learn how to drive in a sports car? So the movement is much faster. So yes, it's a car. Yes, it's a opportunity for you to make money. So I learned how to drive on a stick shift. So it's all about your personal preference. It's all about what you want to do. I just want you to understand that the movement is a lot more. The same way when you're in a sports car, you press on the gas, you're going to take off a lot faster. So if you're trading exotics, then guess what? An exotic currency pair can move 2,000 pips a day. So I just want you to be in a mind frame of what you're doing. So you want to make sure that when you're trading, you want to make sure you know exactly what you're doing. See, the strategy alone, before you do anything, has a 92% or higher. 92% or higher accuracy rate. So, but we want to be as close to 100% as possible. So we want you to be as comfortable as possible. And why am I going to show you tonight? I'm going to show you scalping. I'm going to show you how you can actually scalp this. Now, you can scalp, which is 5 pips, 5 pips, get in and out. You can do intraday where you can get a few more pips, 10, 20 pips, basically what we've been talking about, right? 10, 30 pips, what have you, what we've been discussing, what we've been talking about. Or you can swing trade where you set it, walk away and forget it. Well, most people, when you're trying to learn, if I sit down and I do a swing trade and I sit down and I tell you, okay, A swing trade is going, you have to set it, but what happens on the larger time frame, for example, if I'm on a larger time frame, you have to understand that 1 hour time frame is going to be 4 15-minute candles. So if I go back to my 15-minute candles, what happened with these 15-minute candles? With these 15-minute candles, what just happened was I had 2 candles that went for a buy and 2 candles that went for a sell. So you have to be able to understand that movement, and you have to be able to remove your emotions. So when I train and when we're talking and when we're teaching, we're showing you how you can see profit immediately, because you have to grow into those emotions. You have to be able to grow into where you can understand that you're going to see those pullbacks. You have to be able to grow into where you're going to see the fact that your account balance is going to rise and is going to decrease. You have to be able to grow into that. And so that's why tonight I'm going to show you what I'm going to show you. And that's why tonight, that's why I train the way I do. But I want you to understand that it is, you can trade and you can do longer time frames. You can do the hour, but this is why we started with the 15-minute. And this is why I'm going to show you something tonight. But I want you to understand it's still the rules. The rules still apply. And I want you to ask your questions. I want to make sure tonight is a training night. Now, if we see a trade, we're going to take it. It's a training night, but we will trade. But understand that you ask your questions, you make sure you understand, because Thursday we're live in the market. Thursday we're making some money. Thursday we're catching pips. So Thursday is a money night, okay? And I want to make sure that everyone on this call is able to maximize and able to make some money on Thursday. So what is the BYOB Cashout? What exactly is the BYOB Cashout? Now, this is the BYOB Cashout. Now, the Cashout, when I look at it, when I see it, I see when you are in the academy, you first enroll, and you still want to understand that you do want to understand that you want to learn the academy. And they're going to teach you and they're going to train you that you want to maximize and you want to take advantage of learning currency pairs. But what you do is you begin and you study a currency pair. You begin to learn that currency pair. And while you're learning that currency pair, you're studying that currency pair, what is actually happening is you're learning what's called entry triggers. And you're learning the market structure. You're learning all of that. But what the web analyzer does is it collapses that time frame. It collapses you from having to do all that heavy manual labor. It collapses and it minimizes all of that. And it scans those currency pairs for you, and it gives you what's called those entry triggers. That is what that call price is. That is that call price. That's an entry trigger. So understand, it's giving you the currency pair that it found that call price at, and it's also giving you that entry trigger. Now, the strategy that we're using is what's called the BYOB Cashout. So this is the BYOB Cashout. This is the UTC time. That's when it was called. So what you'll notice is you got potential buys, potential sales, potential buys, potential sales. The BYOB Cashout uses 3 indicators. Three indicators. What those 3 indicators are it uses the stochastic. The first thing you want to do is when you see the stochastic, you want to, when you click on one, like for example, I've already clicked on CAD JPY. So when you see that, the first thing you want to do is look at my stochastic. That is the first thing that I want to do. And when I see this stochastic, what I'm doing is I am looking to see if it's around the 80, because it always begins at the 80 and it always begins around the 20. That's where it begins, okay? Now, around the 80, I need it to flip over, or it needs to flip around the 80, the blue line, flip over the red, and a sell, because it's the stochastic is the momentum. The stochastic is the momentum. Understand that. The stochastic is the momentum. It goes down and it goes up. When it's up, it must come down. Always remember that, okay? So this is that stochastic. Now, once I identify my stochastic, if my stochastic is up, then I know I'm coming down. If my stochastic is down, I know I'm coming up. Now, once I identify that, now what I'm looking for is a green candle or a red candle. So if I was at, let me make this bigger to make sure everybody can see it. If I'm around the 20, it must begin around the 20. Now, what I'm showing you tonight, I'm telling you the stochastic will have moved some, but it must begin around the 20, okay? Now, you see this is going for a buy. So I look for my green candle. My green candle must be a green candle with a green candle with a flat bottom. Then my PSAR must have flipped to the bottom. Now I know I can take the trade. Do I have any questions on the rules? Any questions on the rules? I want to make sure everybody understands the rules. No questions on the rules. Okay. Now, where we are.
I have a question.
Okay. Who is I? Hello?
Sorry, I have my internet really bad at the moment.
Okay.
What's the pronunciation of that so I don't pronounce it wrong? Sorry, what is it? Sorry.
The stochastic, this is the stochastic.
That word that you used?
The stochastic?
With the candle, when you're buying it,
Hikanashi candle.
and you're scalping, it doesn't always mean that the candle's gonna go up. Does it? Or yes, does it not?
The Hikanashi candle.
Because every time you see another candle, that's gonna increase.
Let me show you the difference. These are what's called Hikanashi candles. Hikanashi candles are indicators. These are not Japanese candles. Let me show you the difference. These are Japanese candles. See, the Japanese candles are the buyers and the sellers, and the buyers and the sellers going back and forth and back and forth. These Hikanashi candles are strictly trend candles. So these are what's called an indicator. So these are built into as an indicator instead of the Japanese candles. These candles are built into as an indicator for the web analyzer. So if you look at your MetaTrader 4, or if you look at your phone, or you look on a trading platform, they're going to be different. Your trading platform has the Japanese candles, the traditional Japanese candles, which you see all the movement of the buyers and sellers, like they're playing tug of war. The Hikanashi candles, however, are an indicator that only measure the trend. So when you see a green candle with a flat bottom, that is a strong indication of a buy. So if you notice with these candles, as they go look like it's upward momentum, like I'm climbing some steps. And then also with the sell, they have a flat top. So they also look like inverted steps. So they all, as long as they continue to do this, you have a strong trend. These are trend indicators. They measure trend. So these candles will always look like this. Does that answer your question? Does that answer your question? Okay. So these are the 3 rules, and you always want to make sure you follow that. So no matter what time frame I'm on, no matter what I'm looking at, this is what I'm looking to follow. So now, with what I'm doing, what we've been doing, everything has been on the 15-minute chart. everything has been on the 15-minute chart. So what I'm showing you now is I'm going to unselect everything but the 5 and the 15-minute chart. So if anyone has been trading with me for a while, you remember in the beginning, when we first introduced this strategy, you can actually trade 5 pips on the 5-minute chart. 5 pips. Then now this is scalping. So you can trade 5 pips on the 5-minute chart. You can do 10 pips on the 15-minute chart. If you notice that you're gonna get a lot more calls on the 5-minute chart. Now, for example, the rules, it works exactly the same. So stochastic is flipped up over the red. The first thing I'm looking for is that stochastic flipped up. Now I have my green candle with a flat bottom. And I have my PSAR, which is a parabolic stop and reverse. It's a reversal. So whenever this PSAR flips, it shows the reversal of the trend. So it has to be at the bottom. It's like it's pushing the momentum of the movement of the candles. It's pushing that momentum up. That's what it's doing. So my stochastic, the momentum is going up. My candles, the trend is showing that it's going up. My PSAR is showing that I have an upward trend. When that happens, what do you see? I see 5 pips. Do not, and remember, this is important. I want to go from the candle. Now look, that covered 7 pips. This is truly scalping. So this is scalping. You do not want, when you are scalping is in and out. I cannot stress that enough. Scalping is in and out. So when you're scalping, this is meant to build your account. Low pips, as your account increases, you increase your lot size. That's how you build the account on scalping. So that's how you build your account scalping. So I'll show you again. If I bring my ruler to the bottom of the candle, bring it up, that covered 7 pips. Why am I showing you that? 5 pips, right? 5 pips in and out the market. Why is that candle important? We talk about your pip reaction time, your market execution pip reaction time. If you got a 3 pip reaction time, you're not getting 5 pips out of this. So your pip reaction time is very important. You will miss the trade. So your pip reaction time is very important. So when you hit your market execution, it's very important that you turn around and you do take profit from the bottom of this candle, because it's very important. Now, when I come back, I turn around and you can just scalp it, and you turn around, that's another 7 pips on the sale. Now, this is what I meant. Do not get hung up on the fact that, look, when this one was actually ready, it begins around the 20, right? Now, when I come back for that sale, it started, but when was it actually ready? Look when it was ready, but it must begin around. You don't see this as much as you do on the 15-minute chart, but it must begin. The momentum has to start around the 80. Look at this. The momentum did not start around the 20. Look at this one. The momentum did not start around, the momentum has to start. So when I see it in the middle, the momentum is not starting around the 80 or the 20. That's why when I'm always saying the momentum must start. It has to start around. It has to begin around the 80, begin around the 20. But we'll notice on the 15-minute chart, when we actually enter the trade, we're entering it It'll be closer. But you notice as long as it begins around and you're catching the momentum, because it's going to go down, it's going to rise up. And so this is what you're looking for as you're scalping, So any questions so far? Any questions, any comments so far? We'll look at a few more. As you can see, what's beginning to happen? The momentum went down and the momentum is beginning to turn around. And this is how you scalp it. Any questions, any comments so far? Okay, no questions, no comments.
Actually, Miss Dyer, this is Sharon. I have a question.
Yes.
When the candle, when you see the time that's on a candle, say if the candle has like 8 minutes, but that is the first candle where the PSAR flipped, everything lines up, and you still have that momentum that's near the 80. Is that considered an okay trade, even though that time?
You're saying, see, because look what we're trading, right? So we're only going for 5 pips. So if I'm getting to it around, let's say I'm on are you saying around the second or third candle, right? So you're saying I missed that first one? Am I understanding you correctly?
Yes, ma'am. The first candle, there was a wick. So, everything didn't really line up the way the rules say. But the second candle, it lined up. But by the time I pulled it up, now it's only 8 minutes, left on that candle.
No, these candles are 5 minutes. So these.
Okay, well, I'm looking at my 15-minute.
Correct.
I have mine up at 15.
Okay, these candles are 5 minutes. So these are going to come a lot faster.
Okay.
And also, I mean, just like anything else, the one you first begin looking at is the one where all the rules line up. So, like, for example, this one actually began around the 80. The momentum started, but you see, look where the stochastic was by the time this one got ready. So this is still an active trade. And I mean, this is a valid trade is what not active, valid. So if I start at the top of the candle that's ready, I mean, that covered 7 pips. What you're looking for is how many pips does it cover? So, I mean, even if I got in, it's only 5 pips. I'm scalping. So there's a lot of trades that you'll be able to take with this. You can scalp a whole lot. But even if I got in down here, right? Because this is truly scalping. This is truly scalping. You've heard people talk about scalping. This is scalping. So if I got in way down here, but remember, my take profit needs to be, I don't need to go no further than those 5 because you got to remember your reaction time. So you might come out with 3 pips. But once you get the hang of it and once you begin doing it, even if I only took 3 pips out of that trade, guess what? It doesn't matter because 3 pips at a higher lot size, as I increase my lot size, that's significant in profit. So you want to make sure that you just continue to maximize, and as you can look at this, you can see that honestly, you could just keep riding this one out because look at how this one is playing out. And sometimes, well, we'll get to that because you can actually go check the 15-minute chart, but this one didn't do it. And now you'll see that PSAR flip up to the top and go grab 10 pips on the 15-minute chart. But you'll just see like this one is just going to keep going back and forth. I mean, look at how pretty the stochastic is. And you see it just went up, it turned around and went down, and it's going to come back around. And that's what it's just going to keep doing. So let's just look at another one. This one falls into that tight piece. I mean, it's the same rules. I believe same rules. This one is tight. So stochastic flipped up. All this is consolidated. Look how choppy that is. We're not taking that. So yes, it flipped up. Then we begin our analysis. We don't want to take any of this. We don't want to deal with this. And then when you see the PSRs this close to the candles, what does this tell me? It tells me that I got a strong trend doing something, but it also tells me, look at this pullback. So even if when this lined up, this actually did not, this one, I was looking at this one earlier. So keep in mind, and I kept this one up to kind of show you because this flipped over. This one gave a notification, it flipped over. When it actually came, this did not have a wick on it. So there was no wick initially. It had a flat top on this red candle. But I mean, look at how tight, just look at how tight these PSRs are to the candles. So what you're seeing, even though the stochastic came down, rule check, the PSR flipped, and the candle was flat. I'm telling you it was because I was looking at it. Decision was made not to take the trade because the PSRs are close to these candles. This is where you make that human analysis. This is where as you begin trading, you can actually say, okay, this doesn't sit well with me because I can look at this. This is correction in the market. This says it's a trend and it's going to be a correction. That's what that says. And what happened? When this candle was almost over, it ended up with a wick. This one pulled, and it was actually a correction. And it didn't start until here that it started getting a gap and it started coming out because it went from consolidation, pulled up, the market corrected, and now it's starting to widen up a little bit before it's something I would even consider looking at. Any questions or comments on that? I think, Lady K, you actually had this issue earlier. We talked about this earlier. This is another example of one. This looks
right. Yes, I remember.
Mm-hmm. And so these are the things that you will start to identify when you start trading. You will definitely just start to identify these things. You'll just start to catch it. But just before you start recognize it, just from your analysis, just from what you're looking at, you don't want to trade when you see the PSRs this close. When you see the PSRs this tight, just stay away from it until you really realize what it is you're looking at. Euro JPY. I think I just won this one. Okay. This is another one. I mean, so we starting around the 20, right? Wick at the bottom, it's not a flat bottom, and then it begins to smooth out, right? I can get, covers it, I can get 5 pips out of there, right? And then I turn around, has a wick, then I can turn around and I can get 5 pips out of there, right? So I can scalp it. Because like I said, you'll see more called. And now, what do we know about the market? These PSRs are still kind of far. So we know that the trend is still trending down, right? We know it's still trending down. But what else do we know? We know that the stochastic is starting to curve, right? We know that. So we know that this trend is ending. So we also see that these candles are starting to shorten, right? We know that. So if these candles are starting to shorten, because You see how bold and strong they were, and they're starting to weaken. These candles are starting to weaken. And as they're starting to weaken, okay, so that means that it's beginning to turn. And so it's beginning, but it's not quite there yet. So, but remember, 5 minutes, it's not 15, it's 5 minutes. So we have 3 minutes and 37 seconds before the next candle forms. So this is going to be another opportunity for you to take an actual buy. Any questions? Any comments? Questions, comments? Now's the time to ask. We're going to put this into action on Thursday. We're going to catch some pips with this. So you need to be able to be in your demo accounts between now and then. So now's the time to ask the questions.
Tasha, this is Lady Cat.
Yes, ma'am.
You said to increase our lot size when we're scalping. Where do you think we should start at if you're saying increase?
You have the pip gold chart?
I might.
Mm-hmm. It's in the Facebook group, but if not, we can make it's definitely in there.
Okay.
But that's definitely something to use.
Okay.
But you always want to do it where you feel comfortable.
Okay.
You definitely want to do it where you feel comfortable. And that way you will definitely see your profits increase.
Ms. Dyer?
Yes.
Alpha Buckley. Did I hear you correctly? I know you have heard you say it over and over again. Did you say correctly that once you looked at the 80-20, I call it my 80-20 rule, but once you look at the 80-20 rule, that means 80 at the top and 20 going down bottom. Once you see it hit 80 or you see 20, then you're going to assume that it's going down or it's going up, correct? That's when you should start trading. Is that correct?
The 80 or the 20, that is the first thing that you look at. And I said, so that's correct in what you're saying. But what I do with that, that's not the end all decision to make the decision to trade. That is the first thing I look at to determine if I continue with the trade, if I continue to do any analysis to determine if I want to take this trade. Because, for example, when I first look at the stochastic, and it is around the 80, I want to continue to analyze. But if I look at the stochastic and it begins around the 40 or 50, there's nothing else for me to look at. It's nothing else for me to even discuss. It's nothing else for me to even consider because that first criteria is off. If I'm not taking any trades, you know, for example, let's look at the stochastic. I'm not taking any trades, none, with it right here. Not taking one trade. So the first thing I do is look at the stochastic. That's the first thing I do, period. So if it's here, then I'm not taking a trade. And it doesn't matter what anything else is doing. So because we don't know where we are in the overall scheme and the big picture of the market and what the market is actually doing, because we have not done one chart markup, we have not looked at market structure, we have not looked at one trend line, we have not done anything. What we're doing is looking at the momentum of the market right now. We're looking at the momentum of where we are in the market. And if my momentum doesn't tell me I'm going down, if my momentum doesn't tell me I need to go up, there's nothing else to discuss. So that is why the first thing that I look at is the stochastic. Is the momentum of the market about to go, is it going for a sell or is it going for a buy? That makes sense?
Yes, it does. Makes very sense now.
Okay. And that's why I want to make sure everybody understands the rules, because Thursday we're going live and you have to be able to practice this and you have to be able to do this outside of this call. And so that's why I say everybody that you all ask these questions, ask them now, because Thursday we're going to make some money.
One of the things. Sorry.
Yes.
What I didn't know. One of the other things is, how do you determine on the right hand side of the chart where you have your points that you're measuring, or where you have your PSAR and you have your what would you call it? What are the numbers? The high and the low. What are the numbers on the right hand side? The numbers that are where the arrow is. What do you call that right there?
This would be the pips or the price, the call price, the pips.
Okay, the call price. Okay, so your call price, is that already set, or we have to set that before we start looking at it or making a decision on everything? Is that already set for us in this particular case, or that's something we have to set?
We don't control this. This
okay. Okay, good. That's what I think. Okay, cool.
Okay.
Got it.
So anybody else have any questions or comments? Okay, so let's analyze some. Let's see what's going on.
Ms. Dyer, your volume is low.
I'm speaking into the computer. Can anyone else not hear me? I'm speaking into
You're fine with me.
So
it's loud and clear with me also.
Okay. So here is USD JPY. This is one that they just called. And as you can see, let's analyze this. So call price, they gave it a call price. And let's see. So, I mean, this one looks great, because what are we looking for? What are we looking at? We are looking at, this one has a nice up, down. I mean, look at the momentum of the market overall. So the first thing I want to do is I want to look at the stochastic, as we just stated. The first thing I'm doing is looking at the stochastic. So the stochastic is beginning around the 20. So now, stochastic's beginning around the 20. So I also want to verify. Let's verify. Let's not forget these simple things. USD JPY, 5-minute chart, 5-minute. We want to make sure that's highlighted. Always make sure that's highlighted. Make sure we got Hikinashi candles. You know, we want to make sure that's there. So my stochastic, the blue line is flipping over the red. It has begun. So we see that it's lining up and it is beginning around the 20. Now, what else do we see? We see that nice green candle. You see how the nice green candle just formed. And it does have a flat bottom. But what's missing is the PSAR. That's what's missing. That PSAR is missing. We cannot take this trade. But what we can do, you know, what we like to have is what's called a watch list. So we're going to begin our watch list. Now remember, these are 5 minutes. So by the time we look at a few more currency pairs, we can come back. And I will tell you this, I have missed some trades because you start analyzing like on a 15-minute chart, and those candles are 15 minutes. So you're looking at 5 minutes, 15 minutes. You're looking at different things when you sit down to trade. Guess what? You turn around, it's like, oh wait, this only 5 minutes, right? See, I've been talking and it's already 4 minutes left. We already missed a minute. We already a minute in. So Just know USD JPY. So it's on the watch list. Now, let's look at another one. Look at how they start in the beginning. So Euro, US, oh, it didn't click over. Okay, Euro USD, same thing. Blue line crossing over. However, look, my candle, it's got a little momentum still going up to the top, but I'm gonna still put it on the watch list because for the most part, it's lining up, right? I mean, that stochastic is the first thing that's important, and the rest is coming. So I'm gonna still put it on that watch list. So I got my Euro USD for, look what just happened. See, that's why I put it on there. So you wanna make sure that you put it on there. Who else is writing a watch list with me? Or is it just me writing a watch list?
I'm writing a watch list. This is
Okay.
Lady Cat.
Got Lady Cat on the watch list. Anybody else?
I have one. This is Sharon.
Sharon got a watch list. Anybody else? Okay, Alvin got a watch list. Anybody else?
Yes, ma'am. I have a watch list. This is Kimbrough.
Kimbrough got a watch list. There we go. Anybody else? That's it? So the rest is just watching? So NZDJPY, and this is important. See how we just clicked it? You don't want to make any assumptions. NZDJPY is on the 15-minute chart. 15-minute chart for a sale. So you want to make sure that you know the difference. So you might have to have two different watch lists. So 15-minute chart. This one got called for the 15-minute chart. I'm going to peek over at the 5-minute, see what it's doing. Nope, nothing for the 5-minute. 15-minute chart. So this is something for, so you see this is definitely something for the 15-minute chart. So it's on that watch list for 15 minutes. So this is one, now you're gonna get another candle here in a few minutes. Everything's gonna form at 9:45. So everybody's getting a new one at 9:45. It look like, I don't know, Dr. Bythewood, I know we're gonna be listening and asking questions, but I think we're gonna be trading on your call because this watch list gonna get kind of long. So here you go. EuroCAD. So EuroCAD on the 5-minute. We got 45 seconds, so I'm not gonna go check another one. I'm gonna just hold off. I'm gonna wait those 30 seconds out.
Ms. Dyer?
Yes.
On that one that you're looking at, the EuroCAD, the thing is that you see that your top portion of the stochastic is at about.
Oh, this one is gonna take a while.
Okay, it's gonna take a while, but you could actually start trading though, couldn't you?
No,
on that?
Absolutely not.
Okay, not okay
Absolutely
because.
Not. So hold
Okay.
on, no, all three rules have to line up. Let's check them all and I'll come back and answer that question.
Okay,
So
okay, cool.
And then I'll come back and answer that question. So, and I think I have something in the chat. So let's check this and I'll come back to that and the chat. USD, so that one's not ready yet. Let me make sure I'm on the right time frame before I move it. Yep, I am. So you see this one? Now, this is Euro USD. This one I'm gonna come back and leave it on because guess what? The PSAR does not wait 5 minutes to flip. It does not wait on the time frame. The candle is now touching the PSAR. The candle is now touching the PSAR. So what now? The stochastic is kind of sideways. It's not pointing straight down, but it's kind of got that little angle to it. Understand? Nope, let's trade. Look at this. Let's trade. If you are actively trading or you're live or demo, let's trade.
Got it.
And it is a market execution. Euro USD. See how I just told you that PSAR does not wait, right? That PSAR does not wait, right? So now, regardless of where you enter the market, okay? Why does it seem like 5 pips? 5 pips. Okay, 1.12082. Make sure you do your own math. And I do mine manually. I do mine manually. So double check your math, and I'm gonna put it out there. Double check your math manually. So let me drop a horizontal line. There you go. Let's see. Oh wait, there we go. So it's accurate, but I like to check mine manually. So that's your take profit, right? Make sure you got your take profit in there. Let me update. Let's everybody update. I lost it. 12081. Now stop loss. Now we did market execution, sold the market, and now modify. Because you want to get the most pips, right? So market execution, and then come back and modify. So now my stop loss, my PSAR is right here. My stop loss is not on the PSAR. My stop loss is above the PSAR, right? So we want to set our stop loss. It's above the PSAR. So 121,155. You see that? Everybody understand that? I'm glad we had a trade to take. Does everybody see that? I have any questions on that? Oh, your question is, so once all the 3 confirmations have been determined, how do you actually get in a trade? Did that help you? Did that answer your question?
Yes, that helped. Helped a lot.
Now that was what we just did was actually the question in the chat. And then even the PSAR. So that is how you actually take the trade once all the rules have been met.
Ms. Dyer, can you repeat where for the stop loss?
See? 12155.
Okay. I did 12159. Should I change it to 55?
It's above. Yeah. It's wherever you're comfortable, as long as it's above this PSAR.
Yeah, I just
honestly, it can be way up here if you want it up here. To be honest with you, it just need to be above this PSAR.
Okay.
It just need to be above that PSAR. And this is what I was saying. This stochastic, you see how it's going a little sideways? So this trade is not going to be a quick trade. Okay? Yeah, this trade might drag a little bit. Because look at how nice and sideways it is. So this one might drag a little bit. So just so you know, let's check out other ones. And then, hold on. And this was on the 15-minute. That's still on the watch list. And back. So I don't know if you saw that, right? So we waiting on EuroCAD on the 5 minute, but we missed it on the 15 minute for a sale. Do you see that? Let me explain to you why. So EuroCAD, remember what happens on one, and you're gonna see this. I just need everybody to understand and comprehend. And so what's happening is on the 15 minute, it takes three 5 minutes to make a 15-minute candle, right? 3 5 minutes make a 15-minute candle. So this is why when I talk about when you're learning how to trade, why this is easier to learn to trade. Well, let me not say easier, while you're actually understanding. And once you grasp this, then to me, you understand long-term and swing trading a lot better. And it'll help you manage your emotions, and I hope you'll be able to understand why when you're swing trading and you're watching the account go up and down, because within those time frames, just like we have a stochastic on a 15-minute chart, you have a stochastic on an hour chart. You have it on every single time frame. That momentum has to happen on every single time frame. So what's happening on the 15-minute is going to happen on the 5. So this has to happen on the 5-minute chart. And so, but it takes three 5-minute candles to make a 15-minute candle. So you're going to see movement happening, but you're going to see movement happening, but at the same time, so what you're seeing here on the 15-minute chart, you're gonna see a lot of movement. You're gonna see a lot of up and down, and you're gonna see the momentum of the chart happening, and it's gonna compile together to make up the 15-minute chart. And that's why when you put your trade in, like the trade that you're actually looking at, you'll see it when you first put a trade in, you'll see it going to negative, then it'll come into the positive. And that's why that stuff happens. And you're wondering, I just put my trade in, why is it going into the negative? Or that might be that pullback, or that's that what you call that correction. All of that stuff is happening, but you'll see that on those smaller time frames before you see it on the bigger ones. So because you're not going to see every movement that happens, because that candle is not broken down, if you understand what I'm saying. So, and just to kind of make it make sense. So for example, the overall trend of the market, what's happened within these last few hours is an uptrend, but you're not gonna see every single movement that happened within that hour. But as you begin to break down, what the smaller time frames do is show you every piece of movement, every little bit of movement. But you have the opportunity to make money on every little bit of movement that happens in the market. So it's easier to begin to understand and to make money from this movement, from these time frames. And then as you begin to stretch it out and you begin to learn from it, and you begin to profit, then you'll begin to understand that big market picture, that big market structure, and you begin to understand that all that movement that's happening, and why your profit is going up and down, and why so much movement is happening, because all of that's happening within those big time frames, but you just can't see it. So the smaller time for the more you get down to the smaller time frames, you just see everything that's happening. So that's why when I'm on a 15-minute chart, it looks different than what you actually see on a 5-minute chart. So this 5-minute chart is feeding into that 15-minute, if it makes sense. So we missed the opportunity when we were analyzing for the 5-minute, for the 15-minute. But honestly, you can trade them all. That's why you cannot take another time frame. You just don't analyze on different time frames. You want to make sure you're on the right time frame when you're doing your analysis. Just take what I said and make sure you're on the right time frame. So what you see is for the 5-minute chart, it's coming up. On the 5-minute chart, it's coming up for a buy. And on the 15-minute chart, it's closing out for that sell. That sell is closing out. We already missed it, but as you can see, that it began to, it's closing out. That sell is weakening. And because everything happens on a smaller time frame first. And as you can see, why is that 15-minute trend weakening? Why is it weakening? Because what happens, it happens on a 15-minute chart, on a 5-minute chart first. We see that it's already beginning to turn into a buy. So here you are waiting, and you have opportunity when all the rules align, when everything lines up, you're going to have an opportunity to scalp. You're going to have an opportunity to catch your 5 pips from here. And that's why you want to stick to the pips. You don't want to try to get 20 pips from this. You don't want to try to go over, because it's going to turn into, when a 15-minute chart lines up, that's when you get your 10 plus pips. You want to analyze your time frames and collect on the right time frames the pips that you're supposed to get. So we're about to transition the call, but before we do we have any questions? Do we have any comments? Any questions, any comments? Definitely time to transition this call. Okay. Well, with that being said, ladies and gentlemen, this is a power packed Tuesday. Power